Hey guys, it's DJ, and I hope you all have been doing well and staying healthy. Today's topic isn't about game reviews or impressions. This one's big. EA, yes, the publisher behind FIFA, Madden, Apex Legends, and of course, Battlefield, is officially being bought out for 55 billion US dollars. That's right, Electronic Arts, one of the biggest names in gaming, is going private. It's been a few days since the deal went through, and naturally, there's been a ton of discussion on YouTube and across social media. But I was curious to dig deeper and learn things on my own. So, after doing my own due diligence, reading through credible sources like Bloomberg and EA's official press release, I wanted to share my thoughts on what this deal really means, and more importantly, how it could affect an IP like Battlefield with its latest entry launching on October 10th, 2025. Now, before we dive in, quick heads up, if you are into breakdowns of big gaming news and want to stay ahead of titles like Battlefield, hit that like button and consider subscribing. It helps the channel grow and lets me keep bringing you analysis like this, plus game reviews and more. So with that out of the way, let's get started. Here's what went down. According to EA's official press release, a consortium made up of Public Investment Fund of Saudi Arabia, Silver Lake, and Affinity Partners will take EA private. Shareholders get $210 per share in cash, which is a 23% premium over EA's last closing price. The total deal value, 55 billion US dollars. That makes this one of the largest deals in gaming history, right behind Microsoft's takeover of Activision Blizzard at 68.7 billion US dollars. Bloomberg notes that about 36 billion US dollars will come in equity from buyers and another 20 billion US dollars in debt financing. That's what makes this a leveraged buyout, meaning EA's future cash flow will now carry the weight of that debt. So why take on this much risk? Well, as reported in EA's release and highlighted by outlets like the Wall Street Journal and Bloomberg, EA has a massive live service model. Think FIFA Ultimate Team, Apex microtransactions, Madden Ultimate Team, which generate recurring cash flow. Investors love that stability. Private equity backers like Silver Lake often look for platform plays, turning a big company into the hub for acquisitions and integrations. And let's be real, the Public Investment Fund of Saudi Arabia has been buying up big stakes across gaming and entertainment, from Nintendo shares to esports investments, so this is also about securing long-term influence in digital entertainment. Finally, going private gives EA cover from Wall Street's quarterly expectations, so leadership can theoretically make bolder long-term decisions without stock price drama. But here's the thing, and Bloomberg hammered this point. Big leveraged buyouts like this carry serious risk. If Battlefield 6 or FIFA 26 underperform, EA still has to pay back tens of billions in debt. Interest rates are high right now, that means servicing debt is more expensive than it was a couple of years ago. Credit rating agencies could downgrade EA, raising borrowing costs and limiting future flexibility. And private ownership usually comes with exit pressure. In other words, within 5 to 7 years, the owners will likely want to re-IPO, sell assets, or spin off divisions. That could mean cuts, restructuring, or short-term decision-making. Alright, let's talk about what we actually care about, games. More specifically, Battlefield. Battlefield 6 is already one of the most anticipated shooters of the year, if not the most. But with this buyout, the pressure is even higher. Investors are going to demand that EA's flagship franchises like Battlefield, FIFA, Apex deliver not just solid launches but sustainable revenue. On one hand, this could mean bigger budgets, stronger marketing, and more long-term support for Battlefield 6. The new owners will want to prove they can grow EA's crown jewel shooter. On the other hand, it could push Battlefield further into live service monetization and battle passes, since recurring revenue is what keeps debt manageable. And if Battlefield 6 struggles at launch, much like Battlefield 2042 did, the consequences might be way harsher now than before. But here's some good news for the short-term future of Battlefield. EA has already rolled out the Season 1 roadmap for Battlefield 6. We are talking about 2 new maps, one urban, one desert, the return of classic rush mode with destruction, brand new weapons and vehicles, plus live seasonal events. To me, this is a bit of a relief. It shows that even while EA is going through this massive 55 billion US dollars transition, they have locked in plans to support Battlefield 6 right from the launch. It's almost like a signal that this franchisee is still a pillar of EA's future strategy. So what do you think? Is this 55 billion US dollars takeover going to breathe new life into EA and finally give Battlefield the comeback it deserves? Or is this going to put even more corporate pressure on developers, making the next Battlefield less about fun and more about revenue streams? With Battlefield 6 launching on October 10th, 2025, we won't have to wait long to start seeing how all of this plays out. The roadmap is set, the game is around the corner, and the stakes have never been higher for the franchisee. Drop your thoughts in the comments, I'll be reading them. And if you want to stay updated as Battlefield 6 releases and beyond, make sure you're subscribed. I'll see you in the next one. Peace.